Hey, everybody. Thanks for joining us on this episode of FutureView's Finance Fireside Chats. I'm Matt Ziak. I am our marketing director here at FutureView, and I'll be hosting this episode. I'm joined by a familiar face who has been the host of many of these episodes already, John Baule. He needs no introduction, but we're going to do it anyways. So, John, why don't you give everyone a little background on yourself?
Thanks, Matt. Yeah, I'm John Baule. I'm CEO of FutureView Systems. I co-founded FutureView Systems about 5 years ago, a little over 5 years ago now. The years are flying by. And prior to that, I've been around for a long, long time. I started with Bristol Myers Squibb. I've been through several companies as CFO, two that went public actually. So had been through the IPO process, and also been through more system implementations than I care to remember. So happy to share any thoughts that anybody is interested in.
Yeah, it's a pressing topic right now, and I'm glad you mentioned system implementations. We did an episode before this, which was kind of around deciding on an ERP and accounting system, and kind of a guide that we walked through with both you and Keith, our CFO. And the idea there was, at what point do I need to upgrade to a specific system, and what do those requirements look like? So if you haven't seen that episode yet, be sure to check that out, as this is kind of a part two in addition to that. But today we're going to talk about sort of the implementation and planning for that implementation process of a system. Now, a lot of times we're kind of speaking to two or three main systems from an ERP perspective that have multiple modules. So the most popular one that will come to mind is NetSuite, and of course there's others like Sage out there as well. But John, hoping you can maybe give everybody kind of a background of walking through a roadmap of what an ERP system implementation might look like from start to finish.
Yeah. Well, the first thing is I will say that in many, many cases, we don't do roadmaps the way we probably should do them. If you think about it, the way it probably should work is you should sit down and start with, what information do I need to be generating from my finance function? What is the information that management needs to operate their business and make good decisions and have the right discussions amongst the management team? And what I probably should do is start with that, with what I would call the end in mind, and then work my way backwards to, okay, how do I get there, and what people and what tools should I need? It's not really the way it works in most cases, to be honest with you. And in fact, I would say in a significant majority of the situations I've seen, the whole process begins with the purchase of software. And when you really think about that, that's probably not the right way to go, because I'm always surprised at how many people buy software and really don't exactly know what they wanted from it in the end. And I'm not sure exactly why that happens that way, but I think sometimes it's because if there's one point of pressure in that chain from determining your needs, working your way backwards to how am I going to get those needs, how am I going to turn those into, the capturing the debits and credits that I need to get to those financial information needs. The place where the pressure gets applied the most is on the specific software piece. And software, and I think it's because software salespeople are amongst the most relentless people in the world. So I think that's where all the pressure is coming from. And I still remember, when I was with Bristol Myers, they told us one day that they had decided to go with SAP, and I asked, just, why'd they pick SAP? And they said, well, because they offered us an unbelievable deal on the software right at the end apparently the deal was signed, as I heard it, on December 31st of the year before. And they got, a killer price of something like $40 million, which I guess is not a huge amount for a big company that big back in those days. This is in the 90s. But I can tell you, I never heard the final amount, but I know it was rumored to be in the 1.3 billion dollars in total implementation. So, but the whole thing started because someone got a good deal on a software package. So I think a lot of times that software piece gets a little too much emphasis in the overall solution. And so.
Yeah, and that's obviously the main focus, just human nature, right? Because that's where the end user is going to be living in, right? So that's why there's probably a lot of emphasis on that during the demoing phase and the evaluation of all the options that are out there. But then you really have this implementation phase, right? And this idea of kind of deciding what you want and how you want to approach it, and maybe talk us through what those expectations versus realities end up being for a lot of organizations.
Well, I mean, I can tell you, I think I read this really interesting book by a Danish fellow who actually looked at projects across. He worked with McKinsey, I guess, to develop a database of all the projects that existed that have been done that were more than $1 billion over, I think it was like the last 20 or 25 years. Just a huge database. And it was fascinating because what he found out was that he looked at it on the vectors of did they deliver what you expected them to deliver? Did they deliver it on time? And did they deliver it in accordance with, in accordance with the budget for the project? And when you put all those together, only 0.5% of those projects actually, I mean, less, 99.5% of those projects failed to deliver on all three vectors. And I think
Wow.
more than 70% went over budget. And I just was like, wow. I mean, you kind of suspect that there's always a little bit of overage, but man, it was like nobody, and when I started to look at that in terms of what I see in the smaller business world, everyone I know is every company we work with is putting in Workday or NetSuite or Intact or Financial Force or a new PSA or something or adaptive planning, whatever it is. I just see this finance landscape that's just littered with failed or disappointing implementations of software, and I think a lot of it is that mentality of the software is the it's the easy part. It's easy to buy software. It's easy to make a purchase. Kind of reminded me of someone who had a lot of money, and you go to buy an automobile, and you say, I just want all the options, but you don't really stop and think, what options do I need? You just say, I want to know that I have everything. I want to buy the whole options. And I think a lot of companies buy software like that. And later on, you find out that you never used your three driver personalized seat warmer feature, even though they had it. It just didn't matter. I can tell you in any car I've had, there are probably 50% of the features that I could never quite comprehend and never use.
Yeah, I
But
don't
they
know if
look
I need
cool.
the heating feature in Arizona, right? Can I drop that one?
Yeah, you can get rid of that one. You can go to the seat cooler.
There you
Um,
go.
but yeah, it's just it's just interesting. So I mean, not only do you find companies buying software kind of quickly, but they buy features that as part of that they really don't even need. And the field we're in, FP&A, is a great example because I can't tell you how many times I've seen, a NetSuite, for example. People buy NetSuite, the general ledger system, which I think is a killer general ledger system, a very, very good one. And they also buy the FP&A bolt on to it as part of this. And quite honestly, it almost never satisfies their needs, and which is why there's a gigantic market for add-on FP&A platforms.
Yeah, and you kind of touched on what we like to call, or what you've referred to as, this modular versus monolithic approach, right? Because you have all these options out there from a modular perspective, and that's what the whole selling point of an ERP was maybe 10, 15 years ago, right? But the technology landscape has changed and the marketplace has changed to where it's kind of an outdated approach, no, to think, okay, I need to get this one do-it-all system. But it's like having a Swiss Army knife, right? Like when you're on the go, it's great to have, but the reality is I would like to have some of those pieces
Yeah.
separate and have the best ones, not just something that will get the job done for now, right?
Well, it's exactly right. Like it used to be, and back in the 90s, it was was really the hardest thing you could do with systems was getting them to talk to each other. It's one of the reasons why Excel proliferated, because how do I get my data, my headcount data from my human resources system to match up and apply against my general ledger data? It was hard to do that. And so the idea of an ERP was really attractive because I could integrate those things and everything was on a common platform. So I could look at my, my CRM data, and I could look at my finance data all in the same place. And so it solved a need. And these ERP systems then kept expanding, like, okay, now I've got this ERP, let's add more stuff in. And they would buy additional companies and they would try to put them on the same platform so that they had all these things together. So they were solving for the integration. The thing that's happened that I think has changed the landscape is that integration is not that difficult anymore. Now, most systems are cloud-based, and there's a wide proliferation of APIs. So it's actually quite easy to combine different things. It's not hard at all to use some payroll system and connect it to QuickBooks, quite honestly. It's not hard to connect, a NetSuite to an FP&A platform. All these things are much easier to integrate. So if you take away that integration as your primary motivation, then really the next focus is, well, how do I get the best applications along each thing? Because the way that these ERP systems developed is they all started someplace. NetSuite, for example, started as a really, an accounting system, a cloud-based accounting system. And Workday started as an HRIS system that then evolved into account. Everybody, and they all said, hey, there's not enough business. Everybody wants to grow. NetSuite wants to grow fast. Workday wants to grow fast. So they all start to add things to their portfolio under the guise of integration. So, Workday added a GL to its HRIS. Salesforce added a GL to its CRM. So that's Financial Force, right? NetSuite went out and built a CRM to put into NetSuite. But they all kind of try to put all these things together and have things. But the truth is, Workday is a really good HRIS system, kind of mediocre on the GL side. NetSuite is a really good GL system, kind of mediocre on the CRM side. Salesforce, good CRM, not so much on the GL side. So they all kind of at their DNA for their core system remain strong, but as they tried to expand tangentially, they increasingly move towards mediocrity a little bit. And so I think for a finance team, why would I not want to pick the best of all these places? I want to use Salesforce as my CRM. I want to use NetSuite as my GL. I want to use, something else as my HRIS. And I kind of pull these together, connect them. And then not only do I have the best of breed in each individual kind of function, but I also have this much greater ability to change, because if something dramatic happens on the human resources side and there's a new development and I want to come in, put a new system in, I don't have to change my entire ERP. I can just change the other one. The other advantage to that is the time of implementation. Think about an ERP implementation. Everybody goes to an ERP implementation as the cure-all for everything. But you're touching, because it's got all these systems embedded in it, you're touching every aspect of the organization. And it really is a huge distraction for the organization, and it takes longer just because it's more complicated.
And it disrupts your workflows, right? That you're already working through.
Oh, absolutely. Because you got to have people from every single function who are engaged in this process to put it in. Even a small project, if it's going to touch HR and it's going to touch sales and it's going to touch finance, all these functions have to be involved. And especially in a company like, we work with a lot of companies, that are under 200 million in revenue. They don't have the bandwidth to have extra people in each function to do these things. So I think it tends to make these projects very long. And I think it's one of the reasons you get kind of a lot of failed projects or dramatically overrun projects. I think doing it in a modular way where you're okay, I'm gonna focus on, let's get a good AP process in place. Let's get a good GL implemented. Let's get a good HRIS implemented. Doing it that way, I think you have a much lower risk of what I call cataclysmic failure, which you see. And I think I mentioned in that article that I wrote that I was talking to a CEO who asked me what he should expect a system implementation to cost, and I said, obviously it just depends on whatever, but the rule of thumb I'd always heard is that the implementation was usually about 2 times the software cost. And he just looked at me and he laughed. And I mean, I'll never forget. He just like laughed. And he goes, we're at like 10 times the software cost right now. I don't even think we're halfway done in the project.
And that was never in the plan, right? They
Not
never
even
planned for
close,
that.
not even close. Well, and that was that whole thing we were discussing earlier in this project book I read. The funny thing about planning for these projects is you could look at all the projects and say, the average system implementation goes over by, say, 25%. So I'm here and I'm planning the project, right? And so I build in a 25% buffer, thinking that's the average overage. But I'd be misleading myself, because the reality is these projects, this was one of the insights from this book I mentioned, which I wish I could remember the guy's name, but
Ben, his name was Ben Flyberg, I believe was his name.
yeah. That's why I don't remember it, because I can't pronounce it.
How Big Things Get Done, I think was.
Yes.
Yeah.
Really good book, by the way. I couldn't recommend it more. Very entertaining, but what he said, which I thought was especially interesting, is that when you think about, okay, I'm going to build that, projects on average go over by 25%. So I think, well, I'll put in a 25% buffer and now I'm covered. But the problem is projects are not that kind of a statistical distribution. When you use that average 25%, you're assuming that you have a bell curve on projects, and kind of like grades or weight or whatever, those things. But that bell curve there's a lot of other ways things are distributed. And what he found by looking empirically at all these projects is that, in fact, the curve of overages in projects has a very fat tail at the end. What does that mean? That means that the projects that don't go over by the average of 25%. They go over by 400 or 500%. I mean, on average, it's not the distribution. I'm not a statistics major, but I always think in terms of bell curve distributions, and we always talk about the 80-20 and everything, but everything in life is not distributed along a bell curve. If you look at height, he gave a great example that clarified it for me. But if you look at height of people, and you looked on a bell curve, the tallest guy in the world would be about 9 feet tall, believe it or not, but 9 feet tall. Shortest guy would probably be a couple feet tall, but that would be the range, right? And then on average, we'd all be somewhere in the 5.5 to 6 feet range. That'd probably be the middle of the bell curve. So there you have what they call a very thin tail. You'd have very few people reaching the 9-foot mark and very few people reaching the 2-foot mark. On the other hand, when you look at like the richest person in the world, if you put all the wealth by person on a bell curve, the richest person in the world would be, I think, something like 3.1 million times richer than the average. So not even close. So it's not a bell curve. It's what they call a fat tail distribution. I mean, if you applied the fat tail distribution to height, the tallest man, if you took that distribution and applied it to height, the tallest man in the world would be taller, way above the space station. He'd be so tall. Wouldn't make any sense.
Right.
So, but in projects, the distribution is definitely fat tailed, and the projects that go over are dramatically over. So that 25% buffer is really not coming close to protecting you against a fairly likely outcome of your project.
And you were mentioning these modules and how most ERPs offer a wide variety of them, but they're not necessarily all best in breed. If we were to focus in on the planning and reporting aspect of what those modules try to solve, but maybe fall short, is there any specific insight to that you could provide that would maybe educate some of the audience and watchers and listeners about, this is what it does well on the accounting side, but this is a specific use case of where it goes wrong or what its limitation is compared to a dedicated tool, maybe?
Yeah, that's a good question. I would say the first thing is just basic reporting. People think that a lot of the reason that people go to new GL systems is because they're not getting the reports they want. And so you're a CEO of a business and you're just like, I'm not getting the data I want and I need better reporting. And maybe you don't even have a FP&A function at that point or a CFO. So you go to your top finance person who's more of a controller and you say, I'm just not getting the reports I need. And they say, well, that's because we don't have the right system. And so they convince you, let's get, NetSuite or something like that. And they bring in NetSuite and you think, oh, I'm going to go through all this pain, but then I'll have all the reporting I need. But it turns out that NetSuite does a good job of getting you to sort of GAAP financials, but getting information out of the way a CEO wants to look at it is usually very different than GAAP financials. For example, NetSuite doesn't have embedded in it a basic calculation of EBITDA. So, quite honestly, very few companies don't use EBITDA or some form of that. It gives you net income, which is great, but has a lot of stuff in it that confuses things. So now you're the CEO and you just went through all this pain and you still don't have the kind of reports you want, much less the metrics where you're comparing HR data. Maybe I want to see revenue by employee, or I want to see lifetime value or things like that. That's not coming out of your GL system. So reporting is usually the first place where an ERP disappoints their end users. And I think it's partly because, again, it's that idea that I don't think the CEO always, I think they're sold the ERP as sort of a cure-all. It's this panacea that's going to make sure that everything, I'll have all this information, but they don't really step back and say, okay, wait a minute, what information do I really want to see? Most CEOs are far more worried about bookings than they are about historical revenue, for example. And an ERP won't give you bookings, at least not right out of the box. So I think reporting is the first place. And so I would really look at, if I were doing an implementation or thinking about what I need, the first thing I would do is I would sit down very carefully with the management team, not just the finance team and with the CEO, and say, specifically, what information do you need to make the decisions you make? And I think you'd find a lot of times that it's not, that doesn't mean that you don't need good accounting information at the heart of that. A good overall financial information system has to start with good accounting. But accounting is just the beginning of the process. If once you've got those transactions,
And those ERPs do a great job of managing that, right? I mean, that's where their strength lies.
They do. What's funny is we've worked with a lot of companies where I'll go in and I'll find, their top financial person is sort of the controller, and I'll find this beleaguered controller who's just overwhelmed. And they're usually overwhelmed because everybody's asking them for reports and different things that really don't come from that ERP. And the close process, which they are responsible for, usually kind of falls away because they're so focused on, okay, how do I define this report? How do I get this kind of thing out of the system? And one of the things that we do when FutureView comes in is I'll go to the controller and I'll say, look, from now on, your job is only to record the transactions. All I need you to do is tell me that you've got all the debits equaling the credits in the financial system. I don't need you to pull it out in any fancy way. I don't need to report it in any way. I just want to know that every transaction is recorded and done. From there, a good FP&A platform pulls that data out and puts it together into the reports and things that you need. And I've literally seen controllers like have this visible sigh of relief, because what they're good at is the process of getting all the transactions recorded, which is no small feat. Has to be, done. But then that allows them to get into a cadence, and then the reporting piece comes from there. So kind of making sure you know what you want out of your ERP and also out of your controller is an important key and element to this.
Yeah, and you talked about getting what you want out of a system, and that kind of goes back to the planning, which is, the overarching theme here. And it kind of makes me think of the famous book, Move Fast and Break Things, right? Which centers around this tech culture of getting things done at all costs and making sure that, this speed to market, right? And we'll fix it along the way. I even reference Amazon, for example, has teams that they work with, and they have product teams, and they will be competing to push out changes onto, like, let's say you're searching for something on Amazon, and they'll actually have multiple instances that they're testing from different teams, and they allow them to push that out to the end user and then work off of any problems or see which one's working or not in real time, which can be a very difficult thing to manage. But that's one of their advantages of being able to move fast. But maybe that mentality doesn't work for something like an implementation. Would you agree with that?
Um, absolutely. So I've heard this so many, I've had the good fortune to work with a lot of founders and things. And can I say this on the podcast? But the whole get shit done mentality, they'll throw at you, just get shit done and it'll all be great. So there are times where that kind of improvisational approach makes a ton of sense. If I'm Paul McCartney, or I wish I was, and I'm writing a song and I start strumming out things on a guitar, if you watch the Get Back movie, where he just starts to literally write the song Get Back from scratch. Well, you can start from scratch without a plan in mind, because if he gets something wrong, he can go, there's anything that he's there. Or if you're a finance person and you're starting a spreadsheet and just trying to model something out for yourself, and you just start to do it and then figure and let it evolve over time. There's nothing wrong with that, because the cost of starting over is not that great. You know what I mean? You're not that invested. You can easily say, hey, I put this little song together and it really sounds crappy and I want to go and start again. No harm done. Nothing's lost except a little bit of time. On the other hand, when I'm doing something that's sort of irrevocable once I do it, I think I want to put a lot more time into the upfront planning as opposed to an improvisational approach. I was reading a book about Michelangelo, who someone ought to put him out as a business thought leader, because his ability to organize huge projects was almost unprecedented. But anyway, think about when he's carving a statue. Well, he starts with this block of marble, right? If he just starts chipping away and he chips too far in one place, you can't go back. You can't put the marble back in. So he had these careful drawings, and he built, scale models before he ever started to carve into his massive block of marble that he, searched for months to find just the right piece. Before he started chipping away at that, he carefully thought about exactly where he was going to chip, because once you did it, you can't go back, right? And so in that and I think that's probably more analogous to buying a major software system. I mean, once I've signed that 5 or 6 year contract to buy this software for this amount every month for ever, I'm stuck. I can no longer deviate. So that seems like a decision that you would want to have a little more planning, both up front and also a little more planning regarding what do I want out of that software at the end. And it's not the way most software. If you think about the average software guy at the end of a quarter, though, that's an aggressive dude. I mean, a person selling software at the end of a quarter is about as relentless as anybody you'll meet. And I think quite honestly, they they convince people to make decisions a little not that it might not work out, but they make a decision that's a little bit hasty.
Yeah, no, that makes a lot of sense. And a lot of this is derived from something that we're promoting, which for those people who have gotten this far in the episode, want to make sure that they get all the value they can out of this. And so we are putting together and releasing a magazine, and one of the main articles of that magazine is centered around this topic, that we go into great detail about what we've already discussed today and then some. But I thought, John, that maybe we could kind of wrap up with what are maybe those two or three things that if I'm a CEO or I'm a CFO and I'm going to go through this new implementation, or I've decided that the benefits of what this ERP offers is worthwhile to me, but I'm only going to maybe choose specific things. What would you say are those three or four things that they should focus on?
I would say first and foremost, really hone in on why. Why am I doing this? Don't just buy software because things feel like they're out of control and you just want to take an action that somehow will feel like you're moving towards a solution. Ask yourself, why specifically do I think I need a new ERP or whatever? Why do I think this is what will help me? And that means really, and making sure that the why that you come up with, is specific enough to get you to the tactics that you're going to employ to make things happen. So really ask that question. Second thing is start again, and kind of along the why thing, start with an end in mind. What are the metrics I want to look at? Don't just say, I want more data, I need more information, buy a new system. That's kind of a wishful thinking approach. Instead, say, I need to see bookings by this, and I need to see, and have a real discussion about whether what you need is realistic too. I you'd be shocked how many times I've heard people say, we're putting in the new system because I need real-time information on X. Well, guess what? There is no general ledger system or ERP system out there that will give you real-time information on anything unless you put real-time information into it, which nobody does. So just the word always kind of sets off alarm bells in my mind, because it tells me that there's a disconnect between what management thinks they want and what they really want. And quite honestly, very few people can deal with real-time information on most things. I mean, unless you're trading stocks or something like that, real time is not that critical. Second thing is, I would really think hard about this modular versus monolithic approach to ERP. I actually would prefer to almost get rid of the word ERP. And instead, what I would say is ERP is nothing but a whole bunch of applications. Pick the specific things you need. You need a good general ledger system. Pick a good general ledger system. I need a good system for tracking my sales leads and everything. Pick a good CRM system. But pick the individual ones. If you're as any audiophile will tell you, the same company that makes a great turntable doesn't necessarily make great speakers. You want to pick the right components and put them together, and that does two things. And that would be my next thing is don't when you're picking these components, think about it like, don't commit yourself to these big giant projects that have 12 to 18 months supposedly to get to where you want, because they just have a lot of room for failure. I really have a fear of long-term projects, unless you're a company with so much planning resources. And even us, look at the government. I mean, how long did it take us to build that the big dig in Boston? Like 12 years, and they probably had the best planning people anywhere. Unless you have that, keep your projects small and modular, and that way you're less likely to have, you don't disrupt the organization. you kind of evolve into a system that fits you better. I just think that's a, kind of a better way to go. And then the last thing I would say is just avoid that magic pill mindset that if I just do this, it'll all work. Software is not a solution. Software is a tool. It's a component of a solution. You gotta, your business, very few software in the business world, very few pieces of software solve your problem without a lot of people and a lot of process around that. Everybody says that, but I think people forget it and they go right for the, I just do this, I'll have the magic pill. So really try to avoid that magic pill mentality.
I like how you said software is not a solution, it's a component of a solution. And I think if we had to kind of summarize everything in one phrase, that really is it, right? Software is just one component of the overarching components that make up an implementation process, that make up the actual utilization of a tool after the fact that it's implemented. And it's that planning process and really not just taking your time, but just not overcommitting so that you can manage the aspects that you can control. And that then allows you to shift focus if you need be, as the business needs change too, that you have that flexibility to change when you have other systems that have that configurability.
I think that's right, man. I think that's a real mindset change. I think even when I talk to CFOs, sometimes they think about the software in one bucket, and they think about the people they need to hire in another bucket, and they don't always put the two together. And so you could end up with software and people who don't have any knowledge of how to use that software. It doesn't get you to a solution. And I think you'd be better to think about a complete, okay, here's what I'm trying to solve. And then how do the people and the solutions and the software fit into that overall solution? I think that would be a more effective way to do it. I don't think you can divorce the two and look at them completely in isolation.
Absolutely. John, I think this is just the start of a kind of bigger theme here of project-oriented mindsets and kind of those best practices that not just CFOs, but also founders and CEOs who maybe don't have a fully mature finance function built out yet, but are making these decisions. These are the considerations they really need to make before making such a commitment. So really appreciate you coming on today to give your perspective from your experiences and your conversations with those executives. So that does it for this episode of the podcast, but make sure you stay tuned for future ones to come.
Thanks a lot, Matt.
Take care, everyone.
Take care. Bye.
If you're looking to rapidly transform your finance function, visit us at FutureViewSystems.com.